All right, welcome back for the episode of Carnivore Trades. Today is Friday, September 15th, 2023. If you're not done so already, please give the video a thumbs up. Like, comment, subscribe to the channel. Almost to 3,000. So if you get there, that'd be awesome. Come find me on carnivoretrades.com for swing trading alerts and analysis. Anyways, let's get into it today here. So, markets here, little dump on a Friday. Video I put out this morning, short, did not age well. So, I talked about 4,500 yesterday. Thought we might gap up, kind of gap and crap into that level. Again, remember the SPYs paid a dividend today, so that looks worse than it is. It's still not good on the SPX. I thought maybe we'd gap up and then kind of fade to 4,500. I talked about, kind of some disparity in price with dollar and yields rallying up. And I said, look, it's the gamma, stupid, and it was. Today, 4,500 opened up there, and we just puked it. So SPX taking a pretty good shot. Now, if you remember earlier in the week, I said, if we fade, where are we going to go? 4,450. Where are we right now? It's right to 4,450. And, the gamma had a nose for that level. We went down there, bear flagged, pushed down, and not a coincidence that we're pinning to this level. So that's where the market makers want max pain. And, who am I to say they're wrong, right? So I just follow them. But in any case, markets here today, taking a hit. Now, if we look at the SPY, we can take a look at the volume here. It's good. So usually when I look for a sell-off, I want to see it accompanied by volume because bears need the volume in order to kind of authenticate the sell-off, right? To validate the sell-off. However, it's very common, regardless, for especially a quarterly OPEX to have heavier volume. Even if you look back here in June, that little gap and crap there, it was on heavy volume, and that gave us a little bit of a pullback. That's it. Even here we had good volume there on the lows, so it's very common to see this. But again, just going back to what I've been saying for the last 2 weeks. You give me a close below here. That's going to say, okay, there's more downside here, and we'll look at this pivot. We'll look at the 100 moving average, and we'll look at the August lows as well. As additionally, this pivot here, the August high of last year. Those are all levels that could be in play. Market slipping just a little bit here as we get closer to the close, but again, I don't expect too much. We shouldn't take that out. That's on the SPY anyway. So we got to go off the SPX for the next couple of days because of the dividend. But either way, that's the big level, right? That's all we really care about. You get a daily close below that, then things get a lot more interesting. We did get a daily close above here, or I should say really above that pivot high that we talked about, but never really above the 45. Well, we did get above the 4,500 handle yesterday. But again, it was a little bit of a fake out there. Now, again, what it comes down to is this a real move or not? We had the Fed next week. I talked to my members about this yesterday, and now I'm seeing it everywhere. Not to say that it got leaked, but because it's common knowledge. But sell Rosh Hashanah, buy Yom Kippur could be a thing this year. I'm starting to see it on Twitter now that we're selling. These things tend to get out. I don't like it when it happens, but it is what it is. But either way, market's down 1.25%. Can we get follow through tomorrow, or I should say Monday, and get below this? Then that makes technical position worse going into the Fed, right? So if this holds on Monday and we bounce back up, then you still could get a sell the news on the Fed if the Fed's hawkish, but technical positioning is better as long as we're above this pivot. So just keep that in mind. That's really all I care about, really. If we're above that, we can give the market the upside bias. If not, then we have to watch out for more downside. Take a look at the Qs here. We've been following this trend line. That's broken now. And it's kind of parallel to that previous one going back to March. And it looks like we're just below that 20 and 50-day moving average now. So again, on a little bit of uptick in volume. Take a look at NVIDIA coming in. I thought they might save. I thought we would get pinned to 450 today. That is not the case right now. So a little bit of weakness there. It is just below this pivot as well, 442.22. Again, in the next 15 minutes, who knows, they could save it, give it a buy program bid. But again, definitely some weakness seeing that. You got some support at the gap and this trend line. Obviously, I'm talking about NVIDIA because it's an important stock for tech. Tesla is an important one as well. That's holding up really well still. So the weakness is really coming out of semiconductors. But Q's down 1.7, so a big move there down. We're below that trend line there, and then there's your green bar, below that. We can talk about more downside there. But again, pretty good sell for the market. We need to see follow through though, if you're a bear, and to prove that it's not just OPEX. Russell 2000, again, flirting with that little head and shoulder pattern. My guess is that if this is going to break, it's going to do it on a gap down. It's not going to do it intraday. But again, it's still flirting with that area. And, this can break too. You went down here and we've gone sideways for a week and a half now. So you're not oversold anymore going into this. So a little bit more consolidation could get us through that. My guess is if it's going to happen, it'll happen on a gap down. Dow here again, outside move down. Again, that paid a dividend as well via the DIA, I believe. And you see the Dow Jones here down 85 basis points. Actually, scratch that. So no, I don't believe the DIA did because it's down 86. So that makes sense. But either way, we went up there, tested 350 again, and got rejected. Still a ping pong between these levels until proven otherwise, though, on the DIA. Semiconductors, which you talked about, this needs to go to 145. So into that 100 MA, probably a slight pierce of that, and maybe even down to this trend line. You got a little double bottom there. If that goes, semis are in trouble, and tech is in trouble, and the market's in trouble. Until that happens, market's kind of safe-ish. But again, notice how we never closed above that red bar. We came down bear flag for a week and then a continuation down. If this trend line goes too, and this pivot goes, like I said, and I've been saying this for a while, this is a big fat air pocket. I think it eventually needs to get filled regardless. Yeah, semis definitely coming in. Speaking of air pocket, before I forget, take a look at the ES. So we still have this gap to fill here too on the contract rollover, and we have a nice rising wedge. I tweeted this earlier this morning, went up and tagged it yesterday, tagged again this morning, and now we're threatening that lower line there. So we'll see if that comes into play, and it brings us down to that gap fill. And then, of course, we have that red bar there. So watch that there. Again, potential air pocket. You see the same thing on the NQ. That's starting to break there, too. So just watch that. Keep that on your radar. Just wanted to bring that up before I forget. But watch that level 145 area on the semis. And then, of course, that pivot low on the daily. IGV, a little bit of weakness here. So down 2%. Guess what? We're below that pivot now. And we're below the 50 and 20. So 351.82. That's going to get closed below, barring a big power bid here in the next 15 minutes. So IGV below that level. And I'd say that makes us vulnerable to about 345 just in the short term. And then, of course, 340 is still going to be a big, strong level there, 100-day moving average. And again, this trend line here upsloping should be support as well. But IGV finally coming in. A lot of these stocks have been in the stratosphere. Like we talked about Oracle, Adobe, that came in. They reported earnings as well. That finally coming in and seeing some corrective moves in some of those names. Dow Transport today, actually not terrible considering the rest of the market. But again, nothing great, right? Down move, inside bar, down move. This looks like a bear flag. Talked about this the other day. It looks more like a dead cat bounce than anything. If this consolidates here, this probably has one more drop into the 14,800 area. Maybe even that 200-day moving average. You got the 50-week moving average right in this vicinity as well, 100-week moving average. So that should be a good level of support. But again, Dow Transport's a little bit of a dead cat bounce here. The Jets have been under a lot of pressure too. I think that needs to go down, and I mean, it's trying to hold on to this trend line here. There's still a lot of good weekly support in this area, but again, these transports are coming under pressure here right now. Why? Because crude, these energy prices are really skyrocketing right now. So, but anyways, transports, a little bit of a bounce here. Got to hold that 100 moving average. All right. Anyways, over to interest rates. Let's pull up our yields chart. So there's the dollar, and that can remain strong. But 2-year again, closing back above 5% again for 5.035. And it seems the market gets spooked whenever that happens. If we get above this level, the market's really going to get spooked. 5-year, if you start making 52-week highs, 10-year, I mean, everybody keeps talking about how bonds are going to rally here, but they're not suggesting, the charts are not suggesting that at all. That is a clean cup and handle on the 30-year and the 10. I mean, these are textbook patterns here. 5, 2. They all look very strong. And, if they coil up any further and break through that level, it's going to be problematic for the market. We do have the Fed coming up. We'll see if that moves the needle. XHB, that was weak today. Pretty good dump. There's still a lot of support at 78. I stopped covering ITB so much. But that did, I think we made a lower low there. 80.78, 80.67. So slight lower low there on the IGV. A little bit of weakness. That can come down to the 78 handle as well. So watch those. But XHB got some support here. You can make a case. That's a head and shoulder. Has not triggered. I don't really love that left shoulder, but we'll watch it. It is a trend line nonetheless. If you come here, dead cat, you could break through it. But even if you do, there's a lot of support here at 73 and that trend line there. But, you know, we'll watch that pattern, and home builders, pretty good outside move down. Maybe when interest rates get back above 5%, maybe that's when they'll come back to reality. But right now, coming off the highs there. VNQ inside day, kind of a nothing burger there. 84 and 78 is still your range right now. XLF down 19 cents, although some of the banks actually held up okay. KBE, you know, down just 0.5%. This is, I don't like these patterns on KBE or KRE at all. Look at that bear flag there on the KRE, KB, WB, same kind of look there. But at least for today, they held up better than the rest of the market. A lot of the selling came from tech. But again, they're hanging in there right now. I don't really like these patterns though that I'm seeing. Anyways, broker dealers here pulling back as well. That's still fine. Energy here, so look at crude. Just doesn't want to go down. Look at this. Came back down in V shape. So there's just a bid here. It almost looks like panic buying here in crude. Again, I can't chase it here, but guess what? Guess what we're going to do, guys? You're going to close the week above this pivot. so not really a pivot, but it's a breakdown bar, right? This is why I said, like, this is why, do you see why I kept bitching and talking about emphasizing 83.73? You get a close above that, get out of the way. That's why I said that. So these weekly red bars matter, and you're about to close above another one right now. Now, could I chase it up here? No. I mean, it could sell off at any time. Would it be a good risk reward for short in this area? Yes. But not until it gets there, and it's got to go there in a straight line. But crude here, nice day. Up another 1.1. XLE pulling back a little bit, down 1.2. Maybe a little divergence there, maybe OPEX stuff. Keep that on watch. XOP pulling back here, but there's no problems right now. And OIH pulling back again, no real problems with that either. It is still pretty overbought though. Uranium, CCJ finally topping tail. Take a look at that. Pretty good uptick in volume behind it. And we may have a interim top in CCJ here. Weekly coming off the highs there, good volume. Again, this is a FOMO trade. I mean, it was getting, you know, the bulls were getting loud. Again, the time to buy it was in this wedge here when I was talking about it months ago. The time to buy it is not now. It's time to, if anything, trail stop, harvest gains. You know, if you have a long-term hodl position, fine. I think you'll do fine. But I mean, this is the reason why I said, like, I just can't justify paying up for it right here. It needs to pull back, needs to do weekly consolidation for me to get interested. But that is a topping tail there on CCJ and URNM now on heavy volume on URNM. Let's look at Sprott there. Denison's okay, but again, parabolic. These names are parabolic. I can't chase them up here. Nat gas pulling back here a little bit, down 5 cents, kind of a nothing burger day. Testing the 20 inside of that green bar. Again, still has that kind of wedge pattern look. So we'll watch for that. Maybe it comes down and pulls back, but that's getting tight though. So it's going to have to break sometime soon. Dollar index we talked about a little bit already. Well, briefly. Inside hammer, no problems here. This should still get to 106. No problems with the dollar. Simple. Gold here, no problems either. Holding up okay. I don't know if this is OPEX related, the fact that gold's holding up so well relative to the dollar, but it is. And it's hanging in there. Watch that wedge pattern. Silver also having a decent day as well. Said we needed to defend this level. It did. And it's holding up for now. Again, we'll watch on pattern. I don't have a play on it right now. Platinum also got a nice bid off the lows there. I still think that is headed lower. Palladium, kind of a nothing burger there. And then copper, little inside pattern. That's not terrible if that can continue to consolidate. That can get up to 390. All right, Bitcoin here. Basically a pause day. Again, we'll give it the benefit of the doubt for now. We had a nice little pop the last couple of days. Came decently off the lows, above the 20. We'll see what kind of pattern it puts in. If it can consolidate here, it could have a zigzag up. But right now you still have weekly bear consolidation. So just be aware of that. The longer this stays in this range, the more of a case you can make that it's building a base to go lower towards 21.5. All right. Lastly, just cover the spiders again really quick, or the SPX. Yeah, so we're right at 44.48. We'll close right here in about 4 minutes. Again, on Monday, for bears, you want to see follow through to the downside. Break this pivot on a close. If you can do it on volume, that's even better. And then just be careful. We are going to the FOMC. So there could be a lot of shenanigans going on, lots of games. The Fed is not expected to hike. Wouldn't surprise me at all if they leaked something in the Wall Street Journal if they do want to hike. So keep your eyes out for that. But right now, this is the only level that matters. And that's really it. That's really that simple right now. OPEX is out of the way now, so we should have some unpinning. And we'll be able to get some price discovery here shortly. Anyways, guys, I'm going to wrap it up here. You guys take care. Come find me on carnivoretrades.com. I will talk to you guys all next week.